Hey everybody, it's Bucky with Topdollar HomeOffer. We buy houses Tulsa, and we'd love to speak with you about buying your house. Homeowners over the years have found that sometimes they don't want to be in the rental business. Sometimes homeowners have financial stress that causes them to maybe need to downsize or move out of state for jobs or whatever it may be. We've helped homeowners in all different types of situations. And if you're facing anything where you say, hey, I need to sell my house fast for cash, or I've got questions. Maybe I just want to know what my home's worth. We buy houses and we provide a comparative market analysis, a detailed inspection report, and we present all this through our ARV program. So if you're interested in finding out how much money you can get out of your house and how fast you can get out of your house, then give us a call or go to topdollarhomeoffer.com. Yes, we buy houses Tulsa, and we'd love to speak with you about yours. Today, we are continuing to go through our real estate investing book. We have this available on our website that you can purchase for $7.97. Yes, we don't want to make it expensive for anybody to buy, but if you want the hard copy, that's where you can go purchase it from our website. But if you love YouTube like we do, then you can just listen to it here on the audio video version, whatever you want to call it. YouTube's great to be able to record things and share it and listen to at your convenience. We often love to listen to things when we're driving down the road as well. This part of the book, we're going to talk about mortgages for real estate investment. If you don't have millions of dollars in cash sitting aside ready to buy real estate, then possibly you would need to acquire a mortgage for a real estate investment. That's the difference with our company. We buy houses with cash, so we don't typically buy houses with mortgages. There's some cases where we've bought certain things through kind of a type of mortgage, but generally most of the time we're paying cash, and that's why we can get very flexible with sellers that need to sell their house fast, meaning we can close within 7 days. But if you're starting out, you may not be able to have cash reserves to do that. So sometimes people have to go through the traditional lending process of using a mortgage. In the event that you have to get a mortgage for your first real estate property, take your time and look at the different choices available. Of course, it helps to have great credit. If you don't have great credit, then you can go to our credit repair course and you can download all the things there to repair your credit. There's interesting things in there, tips and pointers, how you can raise your score and swing your score by 50 to 60 points in the matter of a month. You know the strategies to apply. The better your credit is, the better chance of you getting a loan that you want. Here are some choices when it comes to getting a mortgage loan for your property. A fixed mortgage. A fixed rate mortgage usually lasts for 30 years and doesn't change, hence the term fixed rate. This is the mother of mortgage loans. For a long time, real estate investors were only able to get this kind of loan, meaning that they didn't have much choices if they had to go through the traditional bank method. When they get a fixed mortgage loan, it comes up with a fixed rate that remains throughout the duration of the 30 years, 10 years, 15 years, whatever it may be, or less if they pay it off quicker. Up on the end of the 30-year term, the loan would be considered paid in full, meaning that you no longer owe the bank money for your house. You still would have to pay taxes, and hopefully you would want to cover insurance because you just paid the thing off. In the beginning years, the monthly loan payments are applied toward the interest of the loan. That's why banks and everybody you see has commercials out there that says refi, cash out, put the pool in now. meaning that every time you do that, they reset the interest, meaning that now your principal gets pushed to the back, meaning that over the years, you'll pay for this house over and over and over again. $100,000 house may cost you $365,000 over 30 to 40 years, depending on how and what your interest rate are, and if you refi or pull money out against it. It's the great bamboozle over most of the people in the world. If you're paying them interest, you're not making money, but you have to sometimes at the beginning. In the beginning, like I mentioned, the monthly loan payments are typically applied mostly to the interest of a loan. I was looking at a note the other day. The guy was paying $2,000 a month. There was about 700 and some in taxes and insurance. That was going into escrow. There was about 300, maybe I think it was 380 that was actually going to principal, and the remaining was going to interest. So he was only actually paying down his house like $380 a month on a $200-some thousand house, right? So it's crazy. As the years pass, they are eventually applied to the principal balance. So there is a tipping point after so many years. But if you go to Google right now, which we all love Google, and type in the average time a loan, what's the average lifetime of a loan, you're going to find it's between 5 to 7 years, meaning that banks are never getting you off the hook. You're going to always be refining, repaying, buying a new house, moving around. So keep that in mind. Years ago, when I first got into I was working with a community bank, and it's a good way to get started, right? I could borrow money pretty easy from them, but they would do a 3-year note based upon a 30-year, or actually no, it was 20-year loan with the balloon at the end. So they based my payments on a 20-year note, but the note would come due every 3 years. So what does that really mean? I'm never paying this sucker off, right? Barely getting any interest besides interest from the payments I pay. It's all going to the interest and not the principal. So be aware. I mean, sometimes you have to get going somewhere and then you can adjust later, right? You can always fix the house up, put some sweat equity into it and sell it and get more cash so you don't have to finance as much anymore. This is about the easiest loan for investors to get because the terms are simple, right? You usually won't find anything unexpected down the road as you continue to pay it off. Real estate investors would probably want to look at paying off a loan early so they won't be saddled down with a lot of debt for a long term. The focus of real estate investing is to create wealth, not to have financial liabilities. When investors get wealth from real estate investing, they can enjoy it as they continue to invest in other properties. We went over quite a bit here. We're going to talk about some other types of loans on our next video here. The next one, stay tuned. It's going to be no money down loans. Zero investment. Yes, there's deals out there. Stay tuned. Remember, We Buy Houses Tulsa. You need to sell your house fast? We can help you do that. Give us a call. We buy houses as is. Don't have to fix anything up. We'll give you a $top home offer with our ARV program, giving you 3 options. Check us out, topdollarhomeoffer.com.